What kind of valuations we can find in European equity markets?
The market has increased over the last 6 months mainly because of a revaluation of individual companies. So the market has become 20% more expensive over the last year because the underlying earnings of companies are actually not growing. So the market was extremely cheap a year ago and has become normal again. So it really depends on what's going to happen to the fundamentals of the companies and to the economy in Europe to determine where the market is going next. To move further up, I think valuation alone, a further up re-rating should not be expected, and it won't be likely unless we have positive underlying news, either on the company side or for the economy.
What kind of earning prospects investors face?
Well, over the last 3 years, there's been a steady downtrend in earnings expectations. At the beginning of the year, people are always very optimistic and expect double-digit earnings growth. And then in the course of the year, the companies simply don't live up to the expectations. So in the last 3 years, we have 0% earnings growth. Now, that's Europe in general, but within Europe, there are always some companies who actually deliver very strong earnings growth. And in our portfolio, in the Comgest Growth Europe Fund, for example, we have put together a portfolio of 30 stocks that have delivered constant earnings growth at double-digit rates. So it really depends. You have to be extremely selective and choose those companies that are able to deliver ongoing earnings growth despite the tough environment. And these companies actually can continue performing well.
What could be a potential downside surprise?
Well, the nature of shocks is always unexpected, so it's difficult to predict the unexpected. But in looking back over the last 10-20 years, the sort of shocks we've had were either a natural catastrophe, think of the tsunami in Japan, a political event like a terrorist attack, September 2001, or of course we still have plenty of negative surprise potential in Europe. The European situation remains very unstable with regard to economic growth, the financial health of the banks, the consumer sector, the private households are still very indebted. And of course, budget deficits of the governments are still in a very bad shape. So any negative surprise or negative momentum could trigger a vicious circle that turns exactly in the opposite direction of what we have benefited from in the last 6 months. As we have seen in recent days, a slight political upset in Spain calls immediately into question the whole debt sustainability of that country and therefore puts in question the economic prospects of the whole of Europe.
What instead could be a potential upside surprise?
An upside surprise could come either from an acceleration in the economy anywhere in the world. You know, in the last 2 years, we have seen a slowdown even in the fast-growing emerging markets, but there are signs that they're turning around. Also in the United States, there seems to be some growth. So if that filtered through to either better export opportunities for European companies and even better economic growth in Europe, that would be a fantastic positive surprise, which would also then enable companies in general to produce earnings growth again, which, as I said, they haven't been able to do in the last 3 years. So I think that would be the best possible fundamental surprise that we could think of.